We found two unusual trades worth millions of dollars on SoundHound AI stock, ticker symbol SOUN, on the last trading day, January 2nd. And so in this video, we will analyze this data of unusual option activity to find out if wealthy investors are bullish in buying SoundHound AI or bearish and selling SoundHound AI, so that we can also trade in the same direction to make money while the rich are getting richer on Wall Street. Because as we all know, the rich have more access to information, including leaked insider information, to make better financial decisions. No wonder the rich get richer. So without further ado, let's dive into the data as usual. As we can see here on the options time and sales tape, on the last trading day, January 2nd, we had multiple trades happening, and one of the most unusual trades were these January 10th options at the 20 strike calls. We can see multiple trades happening over here, and we can see that this trade was actually being traded at about $170 each. And when we take a look at this trade in further detail, you can see that on January 2nd, when these trades were being made for these January 10th options, these are very short term, they expire just next week. These 20 strike calls, there was a total of 14,000 volume being traded. And these are clearly opening trades, because notice that the open interest was only 1,700 at the time. But now, when we take a look at the new data updated the next day, on January 3rd, today, you can see now that at the 20 strike calls for these January 10th options, we now have an increase in the open interest. So we know those were new opening trades and not closing trades. So that is a very important component in analyzing this type of data. We also have to analyze other data as well, but we do not have the time to cover it in this video. But we know that based on our analysis that they were buying these 20 strike calls to open. And you can see our position here. POS stands for position. Green means buy, because we also bought these for about $170 each. And when we analyze this trade, you can see that on the risk profile, as the share price, which is represented here on the x-axis of the stock, and the y-axis representing profit, note the zero break-even line, and so if the lines are below it, it is a loss. So you can see that if the stock goes down, it becomes a loss. If it goes up, it becomes a gain, because this is a long bullish trade. And we can confirm it here on the Greeks. We have a positive delta trade. If it was a bearish short trade, it would be a negative delta. And because we know there was about 14,000 contracts being traded, we can estimate the total trade cost, because we know they paid about $170 each. And so we multiply that out and we get a total trade that costs about $2.3 million. But keep in mind, this is still a higher risk trade in comparison to the trades that we share on our website, because of other data that we had to analyze. And so if you want higher probability of profit trades with lower risk, then make sure to go to our website. We'll put a link at the top here where you can gain access to better trade ideas that the wealthy investors are trading for your portfolio diversification, because not all of these trades will be profitable. Even this one might be a loss, but as long as we diversify with higher quality stock picks based on this type of data analysis, then we can become more profitable in the long term. Now, as we mentioned earlier, there was a second unusual trade that we had detected, and you can see here that on the options time and sales tape, it is actually not showing up very clearly. But we deep dive into the data, and if we filter it out to these July 18 options, you can now see that there were multiple trades happening at the 39 strike calls, and they were paying about $418 for each of these call options. And when we take a deeper look at the option chain and the historical data, you can see that for these options that expired July 18th, these were clearly opening trades as well, because at the 39 strike calls, you can see here we only had an open interest of 1,500 contracts. But when the data updated today, you can now see that for the July 18 options at the 39 strike calls, we now have an increase in the open interest. So we know that these were also new opening trades. And you can see that based on our analysis, they were buying these. And that is why we are also in the same position where green means buying these for about $418 each, as we had just analyzed. And you can see that when we analyze this trade on the risk profile, that this trade is also a long bullish trade. SoundHound AI stock is currently trading about $20. If it goes up, these call options become more profitable. If it goes down, it becomes a loss. And we can confirm this bullish trade on the Greeks, we have a positive delta trade. And since we know they paid about $418 for each, and there was about 4,000 contracts being traded, we can estimate the total trade cost of about $1.6 million. Now, this trade is lower risk than the other shorter term trade because we have more time to be right, July 18 in comparison to just next week, January 10th. But keep in mind, both trades are still higher risk in comparison to the trades that we share on our website. And so if you want better trade ideas, make sure to go to our website. We'll put a link at the top here. Let us know in the comments below. Do you think SoundHound AI stock will go up from here, or will it crash down? As usual, please smash the like button, subscribe if you haven't, take care, and have a wonderful day.